Oh, good morning, everyone. Thank you for joining us. It's Alastair Raphael here with Roger Postle, and today we'll be covering our industry overview on the hospitality, accommodation, and tourism industry. So a fair bit of content to get through.
Morning, everyone. Thank you for attending. Roger Postle here. Just keep going with the introduction. I just thought I'd say hello and let you know that I'm here. Thank you so much for your time this morning. I hope you find the presentation interesting and informative. And just to give you a little bit of background, we'll introduce the industry, but we won't spend a lot of time on that because I think most of the attendees that I see that are attending already have industry knowledge and understand the industry, but we'll introduce that briefly. Then we'll go through some various examples and case studies, and then we'll follow that up with some conclusions. So, Al, if you could.
All right, well, we'll jump into the formal introduction, I guess. So, yeah, I'm Alastair Raphael. I'm an associate director with BDO. I've got a background in corporate restructuring, solvency work. Last 5 years, the focus has been more on keeping people solvent and industry reviews, things like that. Roger, who I'm sure most of you know, has got 35 years plus experience in property and hospitality industry. He's a qualified property valuer. He's a securities dealer, auctioneer and qualified auctioneer, as well as has lectured previously in real estate valuations. So Roger's still very active in the market, and his contacts have been invaluable to bring together information for today's presentation, particularly on our case studies. All right, so as Roger said, look, we'll touch briefly on the industry we're looking at as a whole, what it covers. We'll give you a quick overview of the impact. Again, I think most of you are aware of how significant it's been. We'll give it a few facts and figures to back that up. And really the bulk of the time, we'll look at some detailed case studies for our experiences with a range of people in the industry. And then Roger will go on to some details of the impacts on valuations we're seeing, and also we'll share our views on the industry outlook and see what it holds. All right, so moving on into the formal part of it, as most of you would be aware, hospitality, accommodation, tourism is a large combined industry. It's put out there as the 8th largest sector in Australia and contributes over 55 billion to the Australian GDP, 4th largest employer. And what's interesting in looking at this, and I guess looking at the resilience, is that 85% of the industry is actually, or demand is coming from domestic customers. So to some degrees, that's going to actually be advantageous in the current situation. And there is a real history there of resilience, as Roger's kindly educated me about stuff when I was younger. We've seen airline disputes before, which have had similar impacts on where we're seeing for the industry, and we have seen real resilience within the industry, and it's been led by enthusiastic and very capable operators who know their business and know their customers very well.
Just on that, Al, when you also look at the domestic tourism side of things and the international side, I think most people will be surprised at those numbers. But also 44% of that tourism market is based in regional centres rather than in the major centres. And another important statistic there on the background of that is that outbound tourism contributes or spends around about $10 million, whereas inbound tourist visits are at $9 billion. So it's a significant trade-off there with the international market. If we can capture a lot of that domestic market, there might not be as much damage to the industry as we think with the lack of international tourism. But anyway, let's go through that's sort of a little bit of a background. So while there's big concerns for the industry, there's lots of positives there as well. So anyway, what's next up? Oh, the jobs.
Yeah. So we was basically sitting at one stage looking on the cliff, I guess the edge of a precipice, where the industry was looking like it might lose 400,000+ jobs. And I guess government policy has affected where we've ultimately ended up, but things were looking pretty dire there for a while.
Well, I guess those 400,000 jobs that lost. We're on as you say, we're on the precipice of the industry looking at reducing the workforce by 60%. The government came in with JobKeeper, which I think's been a substantial change to the market, and we'll see with the hotels when we go through some case examples down further how significant that is. The other important thing, which I mentioned in the last discussion, which was a segue to this, how the aviation industry comes out of this, particularly in relation to our destination motels, will be very significant in terms of re-establishing predominantly the domestic market. and the tourism travel at this stage. If we remember the presentation that Todd Kelly gave in Cairns last night, how important this winter period is in Cairns in terms of getting the interstate tourists from Melbourne and Victoria to come up. So the aviation will be a big critical thing of it, and also the relaxation of the restrictions that we'll also talk about. Any other comments there? Maybe.
Yeah, guys. I guess the overall view of impact in one word is that the impacts have been significant and have threatened virtually every industry player. But in saying that, there are pockets of good news. We've seen some of the more visible ones around sites being used as quarantine centres, so those accommodation providers have had good occupancy. And in fact, we've seen social good as well as the flow-on impact into the hospitality industry, where homeless are off the street, they're using hotels, motels, student accommodation, those sorts of things. There's some question marks around what that means in the long term, but certainly there's, in addition to all the hurt, there have been a few good stories out there for the industry. I guess if we jump into some facts and figures, we'll go through this pretty quickly, but all we wanted to highlight here is we're looking here at the payment inflows, and accommodation and food services being impacted greater than any other industry reviewed in this study. Yep. Very severe impact, sort of 50% decline. It's obviously going to hurt a lot of players. What we're looking at here is that the accommodation food services relative to last year has taken a huge hit, about 40% of the volume. And when we break that down a little bit further, we can see that the accommodation has been hit harder. It's down sort of don't do only less than 20% of the previous year's revenues. But the food and beverage, and I guess its recovery is also looking a bit slower than has been in the food and beverage services. And that's probably because there's been a bit more flexibility in what's been able to be done in that food and beverage space as opposed to accommodation with the current restrictions. On the alcohol sales side of things, I'll defer to Roger.
Yeah, I guess one of the takeouts on this is that you can see that while the volumes are down 44% in April, the volumes are down 44%, the dollar value is down 55%. That's probably a reflection of the change in the market from on-premise sales to off-premise sales and the impact of that. It was interesting that the wine didn't show the same there. Alastair sort of saw when he was looking at the restaurants that people were sort of upselling in terms of the quality of the wine that they were buying and that sort of thing, which sort of counteracted that. Generally, the alcohol consumption levels, as you can see, I think overall we're drinking probably a little bit more. Some people are drinking less. Most average people are staying the same. Some are drinking more, and interestingly, 30% that aren't drinking. So interesting.
So we haven't all turned into drunks through this, but there's just been some changes. Interesting for those that are drinking more, they reckon that the consumption levels are still at moderate levels. Hotel bookings has been another interesting one. This probably follows on from the stuff that Todd explained last week. I guess the two key takeaways from these slides really are that the impact on accommodation has been significant, very severe downturn. And the key here is that we're talking about levels that are in sort of 10 to 20% of the previous year's booking. So they're significantly impacted. The positive, I guess, is that the recovery is each week they've been increasing. So
as the restrictions came off there, Al, you can see that this is just the last month on a weekly basis. You can see that the accommodation levels have increased. It's coming off a very low base, so it's nothing to be too excited about, but it's very positive. And it also indicates both Brisbane and Canberra and the Gold Coast seem to be, Adelaide is also showing good growth there, and Perth with their mining was still maintained a reasonable level early in the piece, but but certainly I think the highlights there are would be the Gold Coast and Canberra as being the main leaders in terms of the recovery, which is positive for Queensland, with the Gold Coast and Brisbane. Obviously the recovery will be with New Zealand as the international tourism starts. I think New Zealand will probably be something that we might get access to early, but we'll have to see what happens with the restrictions.
One thing I should have pointed out at the start is for housekeeping, being the breadth of this industry is so wide, we're covering a lot of content today. We've made the slides quite detailed and we will circulate those to participants at the end, so the details here. We'll move through fairly quickly through some of this, but as I said, the slides will be available. Also, if you think of any questions as you go along, you're more than welcome to send those questions through, and if we have time at the end, we'll address those questions as well. Look, I guess what we're really interested in here is what's driving the impacts, and as we've seen, really the government policy in the response to COVID has been very significant and swift. So mandated closures, you know, it's self-explanatory that that's going to have a significant impact on businesses. The social distancing and the restrictions around densities within venues has continued to create issues. And JobKeeper's had a fundamental change in how businesses have been able to treat their staff, retain their staff. And we'll touch on that a number of times throughout the presentation because it actually leads to some interesting positions. We know the other side from the government policy is the consumer side of things. And really, we're seeing now more and more that consumers desire for the norm. They want to get back out there. They want to re-engage. They want to be out and about. You know, there have been some positive impacts. We've seen the likes of takeaway obviously surge along with home delivery. And that's really because of the response from businesses trying to find a revenue base to keep themselves going. There has been an increase in in-home entertainment. So people, whether they're playing board games at home or reading books or having people around to watch movies as allowed, that may make some changes to demand in the medium term. And we know that the elderly are still very concerned about getting out and potentially being exposed. So those businesses that have a high exposure to a high number of elderly patrons are likely to have impacts for longer. On the tourism and accommodation side, obviously the flight restrictions, as Roger mentioned before, are having and will continue to have a significant impact. And as Todd pointed out, you know, what do they need? Flights, flights, flights. Some of the challenges we're seeing that we've really observed from these impacts is the cash reserves are being consumed. So if we think about it as a cash runway, we know that businesses at the start of it had a set amount of cash. You know, obviously their incomes are well down. There's uncertainty as to how long it will be, and so there's question marks around how long their cash can sustain. The staffing challenges are very varied. JobKeeper has been fantastic for covering the base cost for most employees in this industry. There's obviously some criteria. This was, I guess, JobKeeper was announced about a week after most of the restrictions kicked in, so there was a period there where there was some uncertainty. It's getting clear now around the fact that once you qualify for JobKeeper, you've got it for the period, and that's really helped maintain the industry's access to quality employees. There are some challenges in that with people getting employees to go back to work that are sitting on JobKeeper. We've had a number of people sort of suggest that their staff aren't so keen to go back. And also for those that maybe haven't had JobKeeper or that have really tried to keep the business running on a shoestring, there has been stress within the staff just from overwork really in trying to make ends meet, particularly for those smaller businesses, owner-operators, where they've stepped in to fill the gaps. What we've seen, I guess, is people's ability to, you know, there have been such major and fundamental changes to the business and the operating environment that people have had to adapt. And as we'll see in the case studies, their ability to adapt is really key. We still have these challenges around what will happen with social distancing, and Roger will go into a bit of detail, particularly for hospitality side of things, on the gaming, poker machines, what that impacts around profitability. Because we all want to know how long is this going to go on for, because not only do we want to get back to business, we also need to know, you know, in the interim, a lot of businesses have liabilities accruing, and that's all well and good for now, but at some point they need to be repaid, and so that's going to impact businesses going forward. All right, I guess we'll jump into the more interesting stuff for us, at least, is our experiences in dealing with businesses and the case studies that we've been involved in, or some of them, and we'll share our experiences on that. So Roger and I will go through a few. I might let Roger run through the first couple, and we'll jump into it.
Just with these case studies, we're not going to mention the names of the hotels, but maybe some of the information, some of these areas and where these hotels are might be sort of fairly obvious. But the first one's a substantial suburban Southeast Queensland hotel. It's got a turnover of about $150,000 a week, with significant gaming. Gaming made up about 50% of the revenue stream. You know, the revenue out of gaming was about $3.5 million with taxes. It was contributing about $1.7 million to the bottom line, with an overall net profit of in the vicinity of $1.5 million. So substantial hotel, substantial sort of gaming business to generate profit. It had 40 staff. The interesting thing with this one, which is a little bit different from the other rural hotel that we'll talk about in a minute, but it had no bottle shop, which is quite unusual in Southeast Queensland, but they were an on-premise operation, and that also impacted how they analysed their business and what they did going forward, which was a function. I think you'll see out of these things, dealing with the restrictions and the impact of COVID is very site-specific and hotel-specific. So in some cases, they embraced change and did takeaway straight away to try and maintain income. In this particular case, they had significant good cash reserves. They decided that the best way to deal with it to protect current assets was a full closure. And to sort of re-engage when the restrictions were sort of being lifted. If we just go to the next slide briefly, Al, you'll see we had the restrictions in May. It's supposed to be the 12th of June. They were going to increase that to 20. That was moved forward to the 1st of June. And then last Thursday, the COVID industry safety plan was approved by the government, which meant that the hotels could effectively have more than 20 people on site and having pods of 20 people. Now, that only was introduced on Thursday night. It allowed them on Friday to start doing that. So the government's making efforts now to try and open the industry. We still can't have gaming, which is a significant impact. There's lots of things that the hotel has to do in order to be open. They've got to keep details of the customers, their addresses. They've got to clean public areas every hour, so on and so forth. So the impact on that is significant as well. But if we just go back to the previous slide out, you know, they had a full closure. They decided that they'd have a full closure. They wouldn't take in takeaways, and they decided to re-engage with the customers at the end of May, with the view of starting limited trading on the 20th of May. When people were allowed to have 20 people, not the 20th of May, when we're allowed to have 20 people in the premises. As a result of that, they were in a position to start trading on Friday, following the release of the information on the weekend. So last weekend was the first weekend when the trade was able to open in other areas, and I guess the take out of that was that. They had up to 200 people at the venue on the weekend. The turnovers in terms of food and beverage recovered quite strongly, but overall their turnover, given that 50% of their turnover before was in gaming, their revenue was only 25% of what it was. But with the increased requirements of dealing with COVID and having pods and all those issues that I mentioned before, their staff costs were 3 times what they previously were to currently open with no gaming. Now, without JobKeeper, that wouldn't be a sustainable thing to re-engage with the community and start providing services. With JobKeeper, that has made, you know, analysing the situation with this hotel, it's made it worthwhile to re-engage and start operating and protecting the staff that they've got in the industry. So. You know, social distancing, maintaining all that is coming at a cost, and the example on the weekend was 3 times. Okay.
Yep. I think it's worth as well, guys. One of the things here, we've put up the Queensland roadmap, and the point of this is to say that the hospitality industry has been majorly impacted. Part of their decision making and trying to plan is to know what are the next steps, what are the easing of restrictions, and it's different from state to state. So rather than putting up every plan here, the point of it is that, you know, they had this deadline of 12 June and there's another deadline in 10 July. What we're seeing is government policy is changing, and industry lobbying is helping make those changes so that hopefully we can get businesses back to being viable quicker. The other point, I guess, is the photo here is actually interesting in that when we start talking about zones, and Roger will go through this as a theme on a number of businesses, is that within the photo there we can see they put a few barriers up. And the reason for this is they're trying to get multiple 20-person zones within a room, which makes it interesting. It might also be worth talking about, because this hotel had a bit of a strong area on gaming. But do you want to talk about GPs quickly, as far as, you know, when you look at turnover for a business in hospitality, in particular for pubs and clubs, there's very different margins and profits depending on the sector. the area or other business?
Absolutely. Well, we've got a rural hotel coming up in a minute. We're going to mention that, but with respect to the GPs, as I said, with this particular hotel, they had roughly $3.5 million worth of turnover in the food and beverage side of things, and $3.5 million in gaming. Out of the gaming, they've got to pay the gaming tax of 1.7, so 50% of that sort of drops straight to the bottom line. Whereas with the food and beverage side of it, you've got bars at 70%, food at 50% the way they're running before. Anyway, we'll come to that. With respect to the gaming, though, an interesting comment you mentioned there a second ago, Al, about how the industry's opened up in various states. With respect to the gaming, and I think this is important and goes on the back of the comments that we made earlier about how the easing of restrictions, we've seen a jump back in accommodation levels, and that's been positive. The same thing existed with gaming. Now, admittedly, these were three major, gaming hotels in New South Wales. They'd all fit in the top 100 gaming hotels in New South Wales. Bearing in mind, New South Wales only has 30 machines per hotel. But the comments from the operators of these hotels, when asked how the re-establishment of gaming was ripping, better than pre-COVID, and outstanding. So I think there'll be a bit of a knee-jerk reaction when people are allowed to come back to gaming. As I said, they were hotels, so their customer base is probably not an elderly community, but being in the top 100 hotels, but very positive in terms of that. Let's have a look at, I think we move on and have a look at a rural hotel now, and just see what the situation is there. Now, this hotel, interesting enough, has similar turnover to the major suburban Southeast Queensland hotel. It's in a rural community. They had good recent rains. In terms of the economy of the area, it's quite positive, which is a good thing for them going forward. They've had rain, they've got good water in the dams. Wheat and barley crops are looking good. The future for growing cotton and that sort of thing is also very good. This particular hotel had about 70,000 in bottle shop trades, 30,000 in bar, 15 in accommodation, 20 in food, and about 15 in gaming. They did a little bit of takeaway food, mainly through the drive-in pizzas and stuff like that. Was about $1,000 pre-COVID. They'd spent 2 years. The critical thing for them was to try and maintain what was going to happen when they reopened. They announced JobKeeper. Obviously, the bar trade, accommodation went down significantly, food went down significantly. So they prima facie, they qualified for JobKeeper. And once that was announced, they decided to embrace the takeaway sales and started repackaging those, putting out family packs and doing taco nights and different meal nights. And they got significant traction from the local community. In fact, the food sales ended up getting up to 14,000, where they had food previously of 20,000, and they probably averaged around 10 to 12,000. So they've probably got back half their food trade doing takeaways, and the cost of delivery of those is less because they don't have to have the wait staff and that sort of thing. So in one respect, that was good. Bottle sales went up 30 to 40% as well, so they're now averaging 100,000 a week in bottle sales. But the thing to understand there is that even though their sales now with their food and a little bit of accommodation are at 125,000, and previously they were 150, the margin's so much less. Instead of 65,000 as a gross profit, their gross profit's probably sitting closer to 25,000. So they're still the JobKeeper and maintaining their staff is critical, and the accommodation will start to come back as the industry starts to service the rural community, and the reps are starting to come back into the area. The interesting thing with Cam was that he's managed to reduce his fixed costs in a lot of ways substantially. Assurance is down from $7,000 to $4,000 a month, or $3,600 a month. He hasn't got Foxtel going forward. Garbage collections are down. So I think the important thing is, with all of these, one of the positive things that's come out of COVID is that is the understanding of the businesses with costs. Okay.
Well, there's a common theme we're seeing. Those that have done well understand their businesses and their cost structures.
And it's their sort of advice from people, and in that sort of thing. We'll briefly mention this one. It's probably very different to most of the accommodation side of things, but I think it's also a very good example. We're talking in all cases how things have gone down. This one's probably an outlier in terms of the results. The area where this hotel was is suffering from bushfires and droughts, but it's got a very strong mining base. It's a new operator that came in, sought to service the mining industry, which is still using it, have an 18-month contract. So the turnover of this business is actually double of what it was prior to COVID, and the profitability likewise has increased substantially. So very much against the grain, but the rest of the community is probably suffering there in terms of their accommodation. But this one, they've got a 400% occupancy with the contract. Instead of getting $110 a room, it's come down to about $100 a room, and they're providing meals. So it's a big success story, that one, in terms of the positives for the next 18 months, which will probably see them out the other side of COVID, hopefully. So,
and I guess examples like this highlight the need to look at each business individually.
Absolutely, that was what I was trying to make. Yeah, absolutely. The next one is I guess a major gaming and accommodation venue in a coastal area. In this particular hotel, the gaming was also a very substantial part of the turnover. They had a significant number of machines which generated a good income, and the changes to the industry and what's required in terms of moving the gaming machines and maintaining social distancing is really critical to how this business is going to go forward in terms of the recovery.
And I think the point at the moment is that area is unclear, isn't it, Rod? The government has sort of a policy decision, but they still haven't got the details yet around the densities, what you need to do with machines that aren't being used, etc. They're still working that out.
And that's part of the reason why at this stage it's still down. It's coming out of and reintroducing the gaming isn't planned until the 10th of July. I do expect, the 10th of July was when numbers were supposed to be increasing in the venues to 100, but they brought that forward. I believe that they're going to try and bring gaming forward as well. But there's been lots of suggestions about putting perspex screens between the machines to try and get social distancing. There's been comments about turning off machines. The monitoring and regulators have said we don't want machines turned off. They've said, well, we'll remove chairs and manage it. I think what the industry is trying to do there is to manage it the same as we're managing the tables and chairs in the venue. So that they can, if people come in groups, they can be grouped up on the machines. But if they come in individually, they've got to manage which machines they can access and use, and maintain social distancing that way as a management tool, which will minimise the costs of moving machines and rectifying and doing changes to the physical environment. There were some very strong words that came out from the health department originally, saying that the machines, that they were going to require the machines to be removed to maintain 1.5 metre social distancing between the machines, so that it couldn't be closer than that. The cost of that would be substantial to the industry, and the timing, and because once you start moving the machines, there's all sort of infrastructure costs with carpets and boxes that they sit on and that sort of thing. So it's a substantial issue with all of that, and I guess where you've got large venue places that you can separate the machines and move them around, or if you had a hotel, for example, that had 16 machines and they got rid of 6 because it was profitable to do that, they might be able to spread the machines out in their space. But in most instances, the rooms are at the maximum size, so it would be removing machines from the facility if they want to maintain that. And then even then, the issue is social distancing nose to nose or shoulder to shoulder. If it's nose to nose, well, we probably can take every second machine. If it's shoulder to shoulder, it's 2 out of every 3 machines. Those sorts of things are so significant in terms of what we need to do with gaming moving forward. It's extremely important that the government gets that right, or the health department gets that right in terms of what we can manage going forward. I think the industry is hoping that we'll be able to manage the re-implementation of the gaming machines as we have with the customers and the tables and chairs.
Yeah, and because of the significant impact for many venues of gaming on their bottom line, it's something we want resolved and to have a bit of certainty around sooner rather than later.
With that last example, it's interesting, Al, they're also in the process at the moment of their accommodation has been quite good, mainly because the area, the coastal area that they service, they've got a combination of tourism and mining and commercial accommodation. Well, and they also had the likes of airline pilots staying there. Well, obviously the airline pilots and the commercial, the mining still there, and support with their services. They've been able to maintain their occupancy in sort of April and May at about 30%. As you saw in those graphs previously, the overall industry was at 11 and 12% of the previous accommodation levels, which means that accommodation rates in a lot of cases were down at 8% and things like that. So at 30%, they've done extremely well. They're also in the process of looking at adding another 34 rooms to their venue, and are in the process of getting that approved. And I think that's worthwhile in terms of that venue to try and expand their get ready to expand their accommodation, because they've already got the infrastructure there. They can actually add the 34 rooms there for about 2.7 million and get it off the ground in about 3 months. So I see a very good future with respect to that, accommodation and game. Well, certainly accommodation side of that venue, and that will also help diversify the gaming income long term as well.
So and again, this one's bucking the trend in that what we've seen. There's a lot of hospitality accommodation projects have been placed on hold at this point. And yet, when you look at the situational dependent for a particular venue or a particular business, if they have the right environment around them from the economic, where you've got often a diversified environment, or things propped up by strong things like mining or a particularly good rural year, we're seeing the opportunity for some businesses to expand even in this uncertain time. So there is this real diversity in the industry.
We'll come back to that accommodation thing. I've got some comments that we'll make later about the accommodation. But Al, why don't you have a chat about this? Is a club-based, a larger club-based operation. Why don't you have a chat about this?
Yeah. All right. We'll go through this one maybe a bit more detail just to talk it through, because again, it changes venue to venue. But here we're talking about a large club. Their capacity of almost 2,000 patrons, so significant business, and they were profitable. Their business was primarily around, once again, gaming and bars and restaurants. Not much in the way of off-site sales. And luckily, these guys have cash reserves. But like everyone, they're very conscious of using those cash reserves up. The impact on COVID's been significant. They were closed. Full closure of the venue. Not really able to restructure to take advantage of takeaway food or anything like that. And so full closure of the business. And in their environment, in their case, because of the size of the venue, there were substantial overheads that still needed to be met. So in looking at their limitations and what they could do, the operators are really concerned about, what's our cash runway? We've got this situation where our overheads and our fixed costs are consuming our cash and using it up. And at the same time, we've luckily been able to defer some liabilities, so we've got that going. But there's this question mark about when will our cash run out? When will our liabilities get to a point that's unsustainable? They were themes I was walking through. And really, JobKeeper made a fundamental change for them in the ability to retain staff and remove some cash flow pressure. And they knew that they needed to get back to a break even on operating point. But because of the uncertainty within the government plans around restrictions and some of the finer detail being missing around areas and restrictions and whether it applied to a whole venue or a room or an area, they were a bit unsure as to how to forecast what was going to happen. And they also knew that when it came to relaunching, they'd need cash to restock, because still got to buy all the food, and the grog, etc., to replace what's going on.
On that point, with the regional hotel, because his takeaway sales have gone up from 70 to 100,000 now, his previous stock levels were around 350, and because of the increased sales, his stock levels went up to 420. That caused him a working capital shortage, which he's now had to manage that stock level back to 350, and he can keep that extra 50,000. But it's really important that managing that working capital. And another problem that's going to come up with these venues is when gaming gets reintroduced, there's a significant amount of cash that you need to keep on site to to just stock the machines, but also for your change up, you know, and in some of these clubs it's $40,000, $50,000, $80,000 that they need in a float. So that working capital burden is coming when gaming because a lot of people have taken the cash out of the premises and they've used that to pay their trade creditors down that they owed money to, but now they haven't got the money to restart the business. That's something that we're going to have to be looking for going forward. Something a lot of people aren't thinking about yet. Anyway, sorry, go on.
Oh, well, I mean, the point there is the old cash is king is very much relevant today, probably more so than ever. I mean, we're seeing suppliers demanding COD, all sorts of strains on cash, so cash is very much king. For these guys, I guess how it's actually played out is the first thing they managed to do was to secure a $250,000 Curata loan, which has been great for giving them a bit more working capital to play with. They've had the support of their stakeholders, which has been good. They've been able to utilise JobKeeper. And JobKeeper, as we've sort of alluded to a few times, can be a double-edged sword. To get JobKeeper, you still have to pay the employees. And the reality is you could be looking at a month or two lag between you handing the cash over and getting it back from the government. And so while they're able to utilise JobKeeper, they actually have to go to the bank and get an additional overdraft in order to pay, keep being able to afford to keep paying employees. Luckily enough, they also got 100% deferral of finance, and the landlord came with the party and has given them 100% rental deferral. They have delayed reopening because, one, I guess the uncertainty around it, and two, just the layout of the venue has meant that they weren't comfortable reopening it with the restrictions that were in place. They're also
that's even with the current restrictions too, Al, because they don't believe that they can you know, profitably open even with the support of JobKeeper. So, you know, slightly different to this major suburban hotel that we spoke about before. They feel that they could open. So, what about let's move on to the next one with the
yeah. So I guess for these guys, the key thing here is really cash reserves, how it's playing out. And one of the themes that come from this is a lot of providers are very concerned what will happen when JobKeeper ends. What will the impact be? And a lot of cases that, you know, there's holds on liabilities. The agreements are that you'll restart payments in September, October. And so what this is really boiling down is to that, you know, there's uncertainty as far as what their position will be. There's uncertainty when they'll be in a position to be making enough profit and have enough cash to start the repayments. It's uncertain how long it's going to take to clear these accrued liabilities. But what is certain for these guys is that they will continue to need stakeholder support. And it's going to be past the currently agreed amounts of September. Luckily, that's actually, they're already in negotiations with supplier, with the stakeholders, rather than leaving that to the last minute. We should touch on the fact here that because there is cash being consumed and liabilities are being accrued, businesses need to assess their cash flow position on a continual basis. And I guess that the short thing here is we could talk about solvency if it gets to a severe case, but really, in assessing your cash flows, you've got to make sure that if you're deferring liabilities, make sure those deferrals are documented. Your forecasts need to be current for the current plan and current expectations. They need to be reviewed consistently. And where you can see issues coming up, make sure you're engaging with your stakeholders, particularly financiers, maybe landlords. Start those conversations early to make it clear that if you need support, you're not coming to them the week before. You're looking at a forecast that shows, you know, 2 months down the track or whatever that you started. And again, cash is king.
I think that's good, Al. With this restaurant trade, I think you've nailed in that last description there the important things, with the restaurant side of things, we might just touch on a couple of things there, but I'd like to move on to the valuation and yield side of it. So can we just sum up where the thing was in this in basically a couple of slides so people understand this is a good story as well, where people have engaged and taken on doing things. So just very briefly, just go through this quickly for a background for everybody that's listening.
Okay, so this one's a small suburban restaurant. Their turnover is more like 30,000 a week. On premise, the usual thing, you know, sell coffee, the likes. They had about 30 staff pre-COVID, but once COVID came along, they were actually very proactive in coming to us at the start, seeking advice. And
I think that's important so that they understand their business and move forward.
Yeah, and really the assessment for us for a business like this, because it was had to make fast decisions, was that back of envelope assessment. Okay, what are my fixed costs I can't get away from? What are my COGS percentages, GP percentages? Where am I making my margin? What's the position going to look like if I run a few different scenarios?
Understanding the business and making proactive decisions.
Yeah, and I will just touch on this quickly. What JobKeeper introduced as a theme. What JobKeeper introduced as a theme here was that there's this dual profitability curve. If this business's income had gone down by less than 30%, they were going to be in significant trouble because they wouldn't have an eligibility for JobKeeper, but would still be retaining and paying staff. Once JobKeeper kicked in, the profitability would rise back up again, and then it would drop away. So there's this dual profitability curve, which was very interesting. As it turned out, it wasn't such a factor for them. Where they actually got to was they decided to go hard. They jumped in, all guns blazing, cut the staff back. I guess I'll cut to the results. They reduced the staff back to just the permanents. They changed their menu so they could sell good quality takeaway food as well as on-site coffee. They very actively marketed and engaged with both their community as well as their suppliers and their employees because they knew there were going to be supply chain issues. As a result of it, they actually increased their sales. They increased their profit because their margin was better on the food. They didn't have the front of house costs, so they're actually making more money than ever before. The downside of it's been they haven't had access to JobKeeper because they were strong from day one. And it's starting to take a real toll on staff, and so they're having to adjust the business as it goes through now. And supply chain still continues to be an issue around food delivery for these as a business. They're actually seeing a transition too out the other side, that because they've had such a strong, their business has been led by takeaway, as other businesses open up, they're starting to lose traction in that area as there's increased competition. So that combined with staff fatigue is really the issue.
So once again, making sure that they keep monitoring what's happening and making proactive changes so that they stay on top of their costs and manage their costs and their supplier relationships.
Yeah, so I guess as Roger's saying there, the things that they did well was, they sought the advice early. They actually understood their business. They used that knowledge of key information to actually cost different scenarios, to make decisions to stick with them and get stuck in, but also to remain proactive and flexible and to change their approach as they went through. Again, we could talk about this stuff for a long time, but we're conscious of time, so we'll keep moving. And
I think you've given a very, very good example there, Al, of how these people engaged and accepted the change and haven't sort of sat there saying, oh, it's too sad, too bad that we've got all this COVID stuff, and they've actively picked it up and engaged. Now, that's not a criticism of the other businesses that we spoke about. They made active decisions not to do things because it didn't suit their facilities and operations. Both of those decisions were positive and correct in my opinion, but very different. And I think that's really important that we understand that this isn't one size fits all. Now, there's been lots of talk about, valuations and values of properties going down and what it means. I'll put on my valuer's hat here a little bit and try and make some comments about maintainable earnings. And, historically, valuers use an initial yield to determine the return on properties. Obviously, at the moment, and possibly even coming out of the end of 2020, the returns on these businesses are negligible or nil. As a result of COVID, but I mean that is not a reflection of what's maintainable earnings, to use an expression that I like using, because that's what it is. It's not what the current profitability of the business is. So valuers need to make some estimates and some approximations in that because of the impact of COVID. We'll see valuers using 3 to 5 years stabilised yield approaches, where they're looking at what the return has been over a longer period to try and get a reasonable estimate of that. But ultimately, the return that you're getting is the maintainable earnings into the future, which take COVID out of the equation. It's affecting the passing yield at the moment, but that apart from the uncertainty of what's happening in the future, that doesn't impact on the value of the business. They'll also be using 5 to 10 years DCS. So I think as a comparison mode for valuations, also taking into account a longer term view to try and make sure that the correct values are adopted for it. But until we start seeing some sales, it's very difficult for valuers to determine what the ongoing cap rate should be. And returns on the investment. Until we actually see those sales, we don't know. However, there has been some discussions in the marketplace where they've seen adjustments being made. There's still sales going ahead. There was a North Queensland hotel that was sold for $6.3 million the other day. What they did with that, they adjusted the sale price on it based on the last 12 months of net operating profit, and basically took that off the previously determined value or contract negotiated price for the hotel. There was a hotel in the Burnett region, that settled. It had a contract pre-COVID. There was issues about force majeure clauses where they could terminate and so on. They decided to settle on that one. They took 6 months trading off it, which was possibly a fair reflection at the time that the purchasers thought that they're going to miss out on income for the 6 months. So didn't adjust. It wasn't a fundamental adjustment of the purchase price, but they did that. As a result of the return on investment, but they adjusted it based on the profitability or the change of the short-term income being derived from the business. Obviously, in terms of valuations, there's some comment about where the valuations will go. We're probably expecting that by the end of the year, when there's some sales through, that there might be some softening of the yields, and that may need to be considered. It'll also be important to look at those softening in yields in terms of how the maintainable earnings is determined for the business, because any softening in the yields, if the maintainable earnings is calculated correctly, will be a function of the risk of the future return. So, but there are talk that the industry, investors in the industry are expecting that values might decline between 0 and 10% by the end of 2020. So let's wait and see what happens. But if that does happen, I believe that that will provide opportunities for cashed-up buyers. We mentioned earlier that with the issues of ongoing valuations and need for it, when we're talking with accommodation, how a lot of projects are not going ahead. There's the feasibility gap with the current COVID crisis means that 75% of the new accommodation projects that were proposed are now on hold. So there's, the ongoing new projects are going to be significantly reduced. Having said that, there's around about 16,500 accommodation rooms in 66 properties that are currently still being built in Australia. So while there's good news that there's not a lot more coming online, there's still 16,500 that are currently being constructed. So those will also impact occupancy rates going forward.
And look, to Roger's point about the opportunities for cashed-up buyers, we've already actually seen where I guess clients have come approaching us trying to see what's out there that they may be able to purchase. All right, I guess we'll move on now to what's the industry outlook, and I guess our views on what will happen in that part of the world. I guess we're seeing it's a mixed thing. It's not all negative. There's some real positives out there as well, but it really does depend on looking at the situation and looking at the environment for particular businesses and particular sections of the sector. And look, the short to medium return outlook really does depend on the government's health and economic policies.
Probably the success of them.
Yeah.
What happened back there with the Spanish flu? We had a second wave that came through. That I see that as a big risk for the whole economy, because a lot of the cash reserves and that have been eaten up. So I think it's very important not to lose sight of that we maintain our social distancing, do the responsible things, and long term that will be a great outcome. But the people, I believe, who have embraced the change are being proactive in managing their businesses, and that the good operators will become better.
Yeah. And that's one of the things we're seeing. The businesses understand their business, understand their cost structures. They're good operators. We do expect them to actually do well out of this. The unprofitable businesses pre-COVID are obviously at a significant chance of failure, and we think there will be a number of those that will fail. Marginal businesses will have additional stress. Again, it's the servicing of the liabilities. I mean, there's so many liabilities are being deferred at the moment, but without stakeholder support, many businesses we don't believe will make it.
And understanding that, those people are sitting there at the moment, they're not having stress put on them, and they're not necessarily addressing their issue. It's not the majority of them, but I do have a real concern for that. So it's important to encourage people to seek advice early and be proactive in managing their circumstances. Now, in some cases, even though they might have been marginal before, they'll still be fine, providing they take proactive steps in trying to reduce their costs and making sure that they understand where their problems are coming and where there's a shortfall in their cash flows.
And that proactivity is important for our next point around people want to return to norm. We think there will be a very strong demand for on-premise offerings, and in fact, we're starting to see that already in the return as people are reopening.
The gaming down south and also the trading on the weekend, you know, those they're quite positive. You know, particularly when that was only organised on Friday, they still had 200 people on the premises, and they could have had more, but that was all that they were set up for at the time. So I think all those things are very good, and it's the government's being proactive in bringing back the restrictions. So all of those things together are good.
And while our broader community certainly has a desire for it, we think the elderly still will be hesitant at this stage. Until the COVID risk really drops off, we think there'll be a suppressed demand there.
And that may show up in some of the club trade and restrict the growth that's coming back to them going forward. Yeah.
And some of the conversations we're having with operators is really that this short-term uncertainty is impacting their decisions. They're delaying capital purchases. They're really wondering if they want to commit to longer-term contracts when they're still uncertain about the viability of their business. And so we think there might be a bit of a change to more of a buyer's market for some things, particularly in the restaurant game and some areas of the hospitality, where the demand for tenancies may reduce as tenants are less inclined to commit to longer periods. They're more aware of what the rental expenses are and their exposure to those. They're probably more conscious of personal guarantees and the like. We are certainly seeing fatigue in the small and medium operators between those owner operators that are trying to fill the gaps to keep the costs down, and that is having an impact on a mental health side for some players. JobKeeper certainly has assisted though in a lot of cases. We think,
and that brings us to the other issue there, Al, that when that runs out, you know, these businesses, as I said, with the major suburban hotel that works at the moment with JobKeeper, it's going to be critical how the rest. So September's obviously the pointy edge of the wedge, but and what position they're in at that stage. So.
And we know the government's looking at policy change and whether it extends it to certain industries, so that we think JobKeeper will be reshaped to target areas that really need it. As Roger talked out, there's obviously some difficulties in valuing businesses. Roger, I mean, maintainable earnings is something that Roger's drilled into over the years.
And analysing that's hard. And also the issue with the gaming, if they require movement of machines, I mean, there's some structural obsolescence. You know, you might have 40 machines, but to change a room that's built to the max with, you know, 40, 45 machines in it, you know, there's significant costs of going and changing that to maintain that level of income. So there needs to be some you know, depending on the outcome of how we come out of it, there's definitely issues that are a concern coming forward for that. Obviously, securing new finance, you know, with the uncertainty, I assume there'll be some issues there. And what we didn't mention there before was the covenants. I think it was on the valuation slides, but obviously that's not lost with a lot of the members that are attending the seminar this morning in terms of LVRs. Obviously, the change in values will affect that, and the ICRs and those issues in that as well. How those
serviceability side, obviously challenge at the moment. But you know, we think that as a number of the struggling businesses fail, it's going to mean there will be less competition for some players, and that should lead to strengths in certain markets or to opportunities in markets coming back. And we are seeing that the benefit of the industry lobbying, certainly within the hospitality industry, the lobbying for multiple areas within one room has certainly helped the return for players to hopefully get back to profitability sooner rather than later. There is a whole section, I guess, on looking at the outlook for accommodation, and look, again, we'll circulate these slides, but in a nutshell, it's going to vary depending on what area you're into. Destination travel, we don't think people want to travel too far, so if you're close, it's strong. Remote's really a tale of two stories. We think the high-end stuff, look, we just need the air travel to return. But we're seeing camping equipment sales go up. We think there'll probably actually be a resurgence in camping and caravanning, that side of things. Transit accommodation, while the airlines are depressed, transit accommodation should be stronger, particularly for those operators that have kept up with the times and modernised their offerings. Maybe the out-of-date ones will struggle given the, I guess, the desires for some of those customers to have a stronger offering or a higher quality offering.
And on the accommodation front, on the weekend, we saw a lot of the destination motels, particularly in the coastal regions, increasing with people travelling to the coastal regions, which was good, but that also brought in issues for them in terms of maintaining social distancing and staff. And you know, it is a labour-intensive thing to maintain your social distancing. So I think that's good.
All right. I guess the takeaways from all this from us, if we want to go through them quickly, is no news to anyone, but COVID really has created unparalleled changes. It is a massive thing, but it is a resilient industry that's been through major challenges before, and so we see a positive future. The government restrictions continue to have a major impact, and we really need clarity around some of the finer details, because they will have a massive impact on profitability, particularly the gaming for hospitality venues. Without that, then the gross profit will be well down for most of these businesses, and the bottom line profitability.
And Al, I think if people are managing their business, seeking proper advice, and they're showing growth, I think they're the ones that are viable and should be supported going forward to come out of this COVID thing in a positive way.
Yeah. Alrighty. So then, really, what we're seeing is that the other side of that, I guess, is the unprofitable businesses. We still think are a significant chance of failure. Cash reserves have been consumed. We know there are difficulties as far as securing further support from stakeholders who themselves may be stretched. There's questionabilities around if you're unviable beforehand, what's changed for you going forward. Marginal businesses, those liabilities that have been deferred are going to come back to bite many of them, or certainly make them struggle for longer. And the question mark over how long it will take to repay those, what sort of terms it will be on, is a very real issue. What we have, I guess, the takeaway for us in looking at this and really thinking about what have the good operators been up to is an interesting one. And there's some common themes we've seen again and again. Proactivity is really important, and in understanding their business, I mean, really understanding the key drivers for their business, understanding the relationships, understanding some of those key margins, and really being proactive in looking into their business, seeking advice where necessary, and being able to make good decisions based on all of that knowledge. And the adaptability is clear because it is a changing environment. The situation changes, it seems, hourly in some cases, where we're going from one plan to another. And so the ability to remain on track, to remain focused, is really important. And what's been interesting for us in looking at this is that for a long time, there's been a real focus on top line growth, on sales growth. Whereas what we're seeing now is those businesses that are looking at their costs and looking at their margins and having awareness of that and renegotiating or dropping or reconsidering it, they're the ones that are actually really succeeding at this stage and making it through, because that opportunity for the top line growth is very limited at the moment, or even for maintaining the top line growth at all.
Absolutely, and obviously coming off the low base, there'll be growth, but it's not going to be fundamental growth over and above where they were before, which is what they were focusing on. So it's historical top line growth we're referring to there, and because we're coming off a low base, as we reintroduce, there will be growth, but that's a positive thing that they're capitalising on opportunities going forward. Okay, so that's the distinction there, just so people understand that comment.
And again, the engagement with stakeholders across the board, be they financiers, be they customers, suppliers, the rest of it. Suppliers has been an ongoing issue for many businesses, but re-engagement with customers, more active marketing, clearer messaging, they've all helped for those businesses that have done well, and communicating with their staff.
Well, and look, it was surprising on the weekend. It started Friday and they ended up with 200 people on site at times at the hotel. I mean, that's very active engagement. The upshot from the accommodation side of things, seeing that growth as the restrictions and the New South Wales gaming machines, all of those things are positive.
And that really reinforces again that need for engagement with stakeholders, because where they're seeing, they've predicted a certain level of supply all of a sudden, or demand all of a sudden, it's 2 or 3 times that. Unless you have the relationships with your suppliers, you can't get your hands on the resources needed to actually utilize or take advantage of that the following day or the following week. Where you have a 1 week lead time on something, you've got a major issue. And those that are doing well have not just made a decision at the start and stuck to it, they've continued to adjust again and again. So I guess our theme for us is that we think that the industry's got some positives. There's certainly a lot of challenges, and we need clarity around business, around government policy, but we really do believe that the good operators will become better. Though even the ones that are good operators, because of the cash flow challenges that have come from this, most will still require stakeholder support.
Absolutely. All right. Well, I think that sort of brings us to the end of the presentation for this morning. If anybody's got any questions, quickly, we've got a couple of minutes probably. And if any questions come up going forward or any issues come up, please just contact us by email or telephone. Our details there on the back, or any other one of the partners here in the advisory space. We'll all be able to help you. You know, there's any questions? Look, there's one here about, you know, survival rates of hotels. Look, I think it's far too early to tell, you know, about survival rates of hotels. I think ultimately they will all survive. It's a question of whether the current operators survive, and it'll probably take 18 months to 2 years until the fundamental markets, particularly from the investor side of things, start to stabilise. So it's a question of whether they've been proactive up to this point, and whether they're aware of what's coming in terms of servicing their accrued liabilities. So I think in a lot of cases they'll be able to do that if they're proactive and they're seeking proper advice. Okay.
Thank you everyone for your attendance today. I'll point out we have been doing these webinars weekly. We're going to go to doing them fortnightly going forward, and the next one will be another industry presentation. We're looking at industry presentations now. The next one's going to be on property and construction, and that'll be led by BDO's Sharon Rowe, who's our one of our business services partners who specialise in property and construction. And Sean McKinnon and Charles Haynes from our division will also help out, and they'll share their insights and their experiences, and I guess what they see as an outlook for the property and construction industry. So it doesn't look like there's any more questions there at this time, but as Roger said, if you have any queries, please reach out to us, and we'll get the slides circulated to everyone, and our details are in there. Thank you all for your attendance, and we'll talk to you later.
Thank you very much for taking the time to attend the seminar this morning.